Hello there. Welcome back. This is an interesting chart. Most of us are familiar with Japanese candles. That is the difference between the chart that you first saw and this chart right here. And the difference is, as you can see, let me just squeeze this down just a little bit. As you can see, this chart here, these Japanese candles, which are wonderful, you can be used with price action. They're timed based, which means right now I'm on the H1 chart, which means every hour, no matter what price is doing, is going to be a different candle. So we can expect price to form patterns based off of the hours. And I know for myself, I've gotten used to trading Japanese candles, which I actually do love. Because I can say I know price moves, or I know price does this, or I have 1 hour to wait and I go back and look at the chart and see where we still are. And so you become accustomed to that. But sometimes the problem is, and I've experienced this myself, is that price, there's a lot of noise that's in this chart here. If I go to the 15-minute chart, there's just a lot of noise. And so sometimes what can happen is you can be faked out. You can get out of a trade too early, or you can stay in a trade too late because of all of this situation here. You just don't know what price is actually doing. So what Renko's does is it eliminates all of the noise. This is a price-based system, which means that every hour will not form a new brick. So instead of calling it a candle, I'm going to call it a brick. And what that means is that when price reach a certain place or a certain price, then it will form a brick. So for instance, this chart right here is the 4-hour chart. This is at 240 or 24 bricks, which actually it's only half of that. It's actually double this. So it's actually 48 bricks. So let me just, if I can get this a little zoom it in. So let's see, one brick should be about 48 bricks. If I can get it right. Yeah. So each brick is 48 ticks, so to speak. So price has to move 48 pips before one brick is formed. Now, what I do is I try to keep this time frame here is about a 4-hour chart, and you could take a look at this chart here. And what I try to do is to match the way that this chart looks with the way that the Japanese candle looks as well, so that way I'm pretty much on the same time zone, so to speak. So as you see this here, you can see the actual shark pattern. You can't you? You can see it. Let me see. But sometimes the question is, where am I starting my X to A leg? I can start it here. We still at a 113. And then we're at the 61.8. We have actually supposed to be an 88.6. Or I can start it here. And we're still pretty much at a 113 C point. And then we actually at our 886. I have other confluences that says it's going to stop at the 113, but we'll see. But the question is, you're not quite for sure where your X or your A leg would begin. And sometimes that's an issue when it comes to harmonics. And what I found is that this has cleared it up for me exactly where my X A leg would be. It'd be right here. So long as you know your harmonics, if you understand your Fibonacci ratios as far as your chart patterns and what you're looking for, you know you can actually draw this out. So from X to A, we have a 50% retracement. As you can see, it's precise. It's very precise. It hits at the 50% and it comes down and it at a 113, which is it's going to be a bearish shark. We know that it's an extension pattern. Price has come up. It has breached the 886. After the 886, it is a 1618. Actually, I think this is a different pattern, but this is just for chagrins. Let's just talk about the possibilities of looking at harmonics by use of a Renko chart. And as you can see, the difference is as well. As your green bricks are forming, you have no confusion as to whether or not you should be getting out of the trade. You know that the trade is still in an uptrend. Even though it has given us a little breather here, it has pulled back. We have a double bottom, as you can see here, if you understand that chart pattern, and it also has made a higher low. So remember what we discussed in the structure video. Prices come up, made a high, a higher low, a higher high, a higher low, a higher high, a higher low. So you understand that we are currently in an uptrend, and not until a major lower high has been broken, a major market structure, are we confirmed to get it that we're in a downtrend. Although you can enter trades without having this broken and catch some pips. It's a little bit more advanced, but once this is actually broken here, you could probably even say right here, once it's broken, you can confirm yourself that you're going into a downtrend. But again, this little video here is mostly about the cleanliness of seeing the charts and seeing what you're looking for in reference to any particular way that you actually want to trade. But speaking in terms of harmonics and understanding, let's take this bottom here. So we have a 38.2 retracement with a 2.7. So if price does not continue to go up, but possibly double tops here, we could be looking at a cipher pattern, which is going to be at 786. We're looking for price to come down here. And so understanding again your Fibonacci ratios, your actual harmonic patterns, once you understand that, whether it's memorized, where you have a sheet and you use these Renko bars, your trading will become that much more easier. You'll know when you get into the trade, you know how long you should stay into the trade, and it's just that much more relaxing. You don't have any anxiety. I find that myself, I'm not anxious of anything. And where you would actually go to get these Renko charts, these Renko bars, is this site here. I think it's, let me just move this down here 1 second. Is it CZ? Here we go. This is it. OVO.CZ. My computer's acting a little slow. There we go. Okay, so this is where they offer you the different type of charts, indicators that you can use. The Renko charts that you saw that I have, they're called mean Renko. And the difference is that they have wicks. And I personally like the wicks because since this is price-based, it's a much more accurate depiction of what price is doing, which is different than just from a regular Renko bar, which is just the box itself. Okay, so you definitely want the accuracy in that. So what you do is you'll go, let me see, you can click on mean Renko. And then you can download them. You'll get I think it's a 7-day free trial. And then what you can do is you can actually purchase it. It's only $45 for a lifetime license, which I will recommend. You purchase your license for $45, and then I can go through a chart with how to actually, if you know how to install an indicator, this is the same process of installing the Renko bars. Also, you want to download, this is actually free. It's called the Omnia Remote Control. And what that enables you to do, you know what I realized? You can't see what I'm saying because I've only shared a certain chart with you. So let me just go back. So sorry about that. I'm talking and realize that you're probably looking at a blank screen. Okay, here we go. Okay, so again, the site is ovo.cz. This is where you can get your Renko bars. Like I said before, it's $45 for the lifetime license, which is worth it because if you want to do Renkos with TradingView, which a lot of people use to chart, which is what I use as well, but their Renko, you're paying $20 per month to use their Renko bars. So there's a big difference. So yes, you may have to alter between going through MT4 and then TradingView. I mean, we all take our trades off of MT4 anyway, but like I said, it's just an extra added treasure or nugget to your box in trading with confidence and with the right psychology in mind. So you want to do and use anything that's going to help you be successful. So again, you'll click on the mean wrinkle and you'll download it here. Like I said, you get like a 7-day trial. You can test it out. If you like it, go ahead. I would suggest paying the $45 for it. And then this Omnia remote control here, you download that as well. This is for free. And what that does is, as you can see, once I've installed my mean Renko bars, which I'm going to show you right here. It's in my indicator list somewhere down here. See, mean Renko, just like a regular indicator, the same way you would install any other indicators, the same way you would install the mean Renko bars, and the same way you would install the Omnia remote as well. So once it's installed, both of them, here's your Renko bars and here's your Omnia remote. You have both of them there. You'll hit on this little M62 button. Actually, it's going to be here. So you hit on the M61 button, which is what this is. And what it does is it opens up an offline chart, and it opens up into a Renko chart here. And the Omnia remote allows you to go between brick frames, or what you would know as time sessions, but it's a little different because it's not based on time, it's based on price. So you're able to go further up. So this right here, the 480 would be something very similar to a daily time frame. The 240 would be similar to a 4 hour. The 120 would be similar to the 1 hour. And then the 60, I guess you can say maybe about 15 minutes or so. And then the 30 would be similar to a 5-minute chart. And so basically this chart here, it's not really a 30. The zero is just added as a decimal, so to speak. So technically what this is meaning is that a brick is not going to form. It's going to form every 6 pips, so to speak. And so basically whatever number you're looking at, that number is going to be doubled. So this number is 60. So it's going to form at every 12 bricks. Every 12 pips, you're going to get another brick. And here, every 24 pips, you get another brick. And here, every 48 pips, you get another brick. But so like I said, I have mine kind of mimicking the time frame against the Japanese candle. So that way I'm sort of inside and in the same range with the time. So I can come back and look at my wrinkle chart at every 4 hours, so to speak, to see what's going on and see if it's mimicking price and so forth and so on. And what I also like about this as well is that we know, let's say this is a 113. We know it's a 113, right? We're looking at this and like, okay, so we're looking at some type of a possible shark. What you can do is an aggressive, and it would be very aggressive, an aggressive approach to this would be to, let's put that right there, put a limit here at the 113, a buy limit, or either just enter a trade once price hits the 113. But to confirm it would be when you have this first green bar close after the white one. That's kind of your confirmation that price could be going up. Now, it doesn't always mean that that's the case, because as you can see, when price does these things here, you have your green bars, but then you have the white bar coming down. So there are retracements, and that's what retracements look like. So what you can also do as well, trend lines work as well. So once this bar here has closed, you can enter the trade and you'll be in a definitely a confirmed state. And you can actually back test this with the Japanese candles. And the way I do that is I'm like, okay, so if I was to enter into this trade at this point right here, I look over to my right and see what price that is. And then I will go to the Japanese chart and I look for the same price, and you'll be able to see that, let me see if I can bring it over. Let's just do that. If I get in right here, his price is at 1.82413, so 824.13. 824.13. Let's get rid of this chart here. So 824.13. I'm going to say like right around there. So you see where you're getting in that, right? You already have this candle right here is your reversal candle. It's the bullish engulfing. So that's your confirmation. Normally, we would have jumped in right there. And so basically you're getting in, you're not missing anything. You're actually getting in at a confirmed trade. So probably right around this wick right here, right around here, you're pretty much getting in. So waiting until that brick has closed, and if you're not for sure if it's going to go back down, you have your trend line. Once price breaks this trend line, then you can get in. You're in a confirmed trade, so you can pretty much kind of walk away, keep coming back and check in to see what's what. Understanding again market structure, you've already created all your lower lows and lower highs. Come back up, we've created another low, we've created a lower high, we've created another low, and now we're creating higher highs and higher lows. So what you can also do as well to be a conservative trader would be you would wait until price actually breaks this initial high, and at this point you see the support is now this level of resistance has now become support, and so now you can feel free to get up into the trade. So you have different ways of entering the market, but as you can see clearly, it's such an easier process to enter this trade than with the Japanese sticks. Again, let's go back to the Japanese sticks and see how what would that look like. So let's say you're in here, and that'll be like right around there. Okay, so pretty much the same thing. But again, like I said, this is the difference in how it looks. And you pretty much trade the same way. You can mark your charts up much more accurately. You are able to see an impulse leg, the complete impulse leg, what it is from the lowest, the relative low to the relative high. So it's no guesswork as to which one is the right leg. And of course, the lower brick frames you go down, it looks a little different. As you can see in this one leg here, you do have some pullbacks. And of course, if I go down a little further, I have my brick setting set to a low number, so that way it doesn't use up a lot of my processor on my computer. That's something you want to take in note as well, because if you have a lot of your charts open and a lot of offline charts, it could slow down your MT4. So, once you get involved with the Renkos, I can actually help you out with the proper settings, at least the settings that I use that helps me out. So I'm not able to go too far back and do all this kind of back testing. I really don't need to know all of that. I'm working with current price and so forth. And so it's not a problem for me. But again, this is something that I recommend. This is an extra nugget for you to help you and to aid you to being successful in your trading career. So we're going to feast on these pips. 2019, we're going to get them. Let's go. So that's all I'm going to say for this little meeting here, and hopefully you've enjoyed it.